Our next topic is sole trader basis of assessment. First, here we need to consider the ongoing year rules. Here we need to consider that if the period of account ends on, for example, 30th September 21, we need to identify that this date lies in which tax year. So this date of 30th September 21 lies in a tax year which starts on 6th April 21 and ends on 5th April 22. So it is a tax year of 21-22 and this is known as current year basis. Now if a business is new, then we need to identify the first tax year and the second tax year of that business. The identification of first tax year is simple. From the date of commencement of business to the following tax year ending date. For example, if business starts on 1st August 21, then the first tax year would be from 1st August 21 till the following tax year ending date, which was in this case 5th April 22. So this is the period of first tax year. So the identification of first tax year is not a complex area. In every case, the first tax year is identified on the same rule. Whether your period of account is of exactly 12 months or more than 12 months or less than 12 months. The first tax year would be identified with this basic rule. While the second tax year is dependent on the length of period of account. If the period of account is of exactly 12 months, then we have to follow the current year basis. So in this regard, we have to consider an example. So this is example. Jenny commenced trading on 1st January 21 and prepared her first set of account to 31st December that year. Her tax adjusted trading profit were 12,000 for the year ended 31st December 21. So here we need to consider what is the first tax year of Jenny and what is the second tax year and how much profit would be recorded or assessed in these tax year. So first thing we have to consider that the business starts on 1st January 21. The first tax year would be from 1st January 21 till the following tax year ending date, which is 5th April 21. So it is known as tax year 2021. In the first period of account, the business has earned a profit of 12,000. This profit is earned in 12 months. Here we need to consider the profit for only 3 months period. So in the first tax year, profit to be assessed is 3,000. As our period of account is of exactly 12 months from 1st January 21 to 31st December 21, we have to follow the current year basis for the identification of second tax year. Our second tax year is from 21-22 and in this tax year we have to follow the current year basis. Means we have to identify that 31st December 21 date lies in a tax year which is known as 21-22 and here the whole year profit would be assessed. Now consider there in the first year we have assessed a profit of 3,000 from time period 1st January to 5th April 21. In the second year, we have assessed a profit of whole year from 1st January to 31st December 21. It means 3 months profit from 1st January 21 to 5th April 21. These 3 months profit is assessed in 2 tax year. This is known to be overlap profit. A profit which is assessed in more than 1 tax year is known to be overlap profit. So this is about the identification of second tax year in case the period of account is of exactly 12 months. Now what if the period of account is less than 12 months? We have to consider from the date of commencement of business plus next 12 months, or you can say first 12 months of business is considered in the second tax year. So let's see with the help of example. Next example is Arthur commenced trading on 1st May 19 and he prepared an account to 30 June each year. In fact, this is more than 12 months. We have to consider the less than 12-month period. This is Patty commenced trading on 1st September 29, 2019. She prepared account to 30th June 20, which means this is a period of September, October, November, December, January, February, March, April, May, June. So this is a period of 10 months and annually thereafter. Her tax adjusted trading profit for the first two periods were as follows. The profit is given to us, that is 30,000 and 48,000. So what we have to consider? On the basis of commencement of business, this is 1st September 19. So in the first tax year, profit would be assessed from the date of commencement of business 1st September to the following tax year ending date, which will be 5th April 20. So this is the basis period for which we have to assess the profit in the first tax year of 1920. As this is a profit of 10 months and we have to consider here the profit for the period of 7 months. So if 30,000 is a profit for the 10 months period, what is the profit for the 7 month period? It would be 21,000. So this is about the first tax year. As in the second tax year, where period of account is less than 12 months, we have to consider the first 12 months of trading's profit. Business is started on 1st September 19. From this date, we have to add further 12 months and it would be 31st August 20. So in this period, we have to assess the profit of first 10 months, which is 30,000 plus next 2 months belongs to the next period of account. So from the next period of account, 48,000 of profit is for the 12-month period and we have to consider 2 months from this. So 2 months out of 48,000 profit of a year would constitute a profit of 8,000. So in the second tax year, the profit would be 38,000. I will show you here. Your starting date is 1st September 19. So in the first tax year, which is 1920, you have to assess profit from 1st September 19 to 5th April 20. You have earned a profit of 30,000 in a period of 10 months. And here you need to assess the period of 7 months. So it would be 21,000. Next tax year is 2021. As period of account is less than 12 months, we have to consider from the date of commencement of business till next 12 months, which is 31st August 20. Here we know that from 1st September 19 to 30 June 20, this is our first period of account and this is a period of 10 months. For this 10 months, we have earned a profit of 30,000. But it is not a complete year. We have to add 2 months further. 2 months further is from 30th June 20 to 31st August 20. And this 2 month period belongs to next period of account. And in the next period of account, we have earned 48,000 profit in the 12 month period. So here we need only 2 months period profit and it would be 8,000. So 30 plus 8,000 would be 38,000, which is a profit of second tax year, the profit to be assessed in second tax year. Third tax year is our normal current year basis would be used, and here we need to consider a profit of 48,000 in accordance with current year basis rule. So here we need to consider that our profit of first 7 months is assessed in first 2 tax year, which is 21,000. This is our left profit, and the profit of 8,000 is assessed in second and third tax year, and this is also a overlap profit. So the total overlap profit would be 29,000. This is when we have a period of account of less than 12 months. Now third thing is, we have to consider if a period of account is more than 12 months. Then we need to consider the date when the period of account end and add previous 12 months, right? Date when period of account end and add previous 12 months. So this is an example. Arthur commenced trading on 1st May 19. He prepares account to 30th June each year. His tax adjusted trading profit were as follows. Period ended 30th June 2020, 28,000, and then 30th June 21, 30,000. Here the business has been started on 1st May 19. So our first tax year would be 1920. Started from 1st May 19 to 5th April 20. This is the first tax year period, and this is a period of 11 months. In 14 months period, we have earned a profit of 28,000. So if 28,000 is a profit for 14 months, what will be the profit for 11 months period? That would be 22,000, and this is the profit to be assessed in the first tax year. Now second tax year is 2021. Here we need to consider that year ending date is 30th June 20, and previous 12 months when added there, it would be from 1st July 19 to 30th June 20. So this is the period for which we have to assess a profit in the second tax year when period of account is more than 12 months. So again we have earned a 28,000 profit in 14 months period. What will be the profit in 12 months? And that will be 24,000. And in the third tax year we have to follow the normal current year basis, and in the third year the profit is 30,000. So it will be recorded 30,000, right? So here we need to consider that the overlap profit, we have assessed profit 11 months profit in the first tax year, 12 months profit in the second tax year. So total 23 months profit is assessed in first 2 tax year, and this period of account is of only 14 months period. So if we are assessing profit in 23 months of 23 months while the profit is of only 14 months, 9 months profit is our overlap profit. So it would be recorded. You can also consider that the period from 1st July 19 to 5th April 20 is assessed in both first and second tax year. So again this is a period of 9 months, and you can assess what is the profit that is overlapped. Now we need to consider a situation. What if period of account is not ending in the second tax year? In that case, the second tax year is we have to assess on the actual basis. Here what is meant by the period of account is not ending in the second tax year? It means that the period of account relates to 3 tax year. So let's see an example of this. This is our business starts on 1st July 19, and she prepared account for 30th April 21. So if business is started on 1st July 19, our first tax year is 1920. Second tax year is 2021. But our second tax year 2021 ends on 5th April 21, and period of account is not ending in the second tax year. So here we have to follow the actual basis for the identification of second tax year, for the finding what is the profit to be assessed in the second tax year. Her tax adjusted trading profit for the first two period is given as 55,000 and 32,000. So here we need to consider that business has been started on 1st July 19. If business is started on 1st July 19, the first tax year would be 1920 and the first tax year would be from 1st July 19 to 5th April 20. This is the period of again 9 months. So if 55,000 is a profit which is earned in 22 months, what is the profit that would be recorded in 9 months period? It will be 22,500 profit to be assessed in the first tax year. As in the 2021 second tax year, our period of account is not ending. So here we need to consider the profit from 6th April 20 to 5th April 21. So here again we have to consider a profit of 12 months, which is to 30,000. Then in the third tax year, where our period of account ends, which is date 30th April 21, again we have to follow that rule of a second tax year where period of account is more than 12 months. Means period of account ending date plus previous 12 months. This is 1st May 20. So we have to consider the profit for this period. Again, this will be same 30,000. So this is the calculation of opening year rules. Now we need to consider the closing year rules. Closing year is said to be year when the business is ceased. So here we need to consider first point, we have to identify the tax year in which the trade ceases. We have to identify the tax year in which the trade ceases. This is said to be the last tax year, right? Plus we have to consider whether previous period of accounts profit has been assessed or not. If it is not, then the previous period of accounts profit is also assessed in the final year of tax. So this is example, Michael ceased trading on 31st March 22. His tax adjusted trading profit for the final 3-year period is 40,000, 42,000, 38,000. He has unrelieved overlap profit of 27,000. So here we need to consider that the tax year in which the business ceased, and that is 21-22. This is the tax year when our business ceases. So 40,000 of 38,000 of last period of profit would be assessed in this final tax year. Plus we need to consider whether previous year's profit has been assessed or not. Remember that this was at that time ongoing business. And ongoing business, in the ongoing business we have to assess the profit in accordance with current year basis. So it means that the 30th April 21 date of ending of period of account also assessed in the 21-22 tax year. So both of these dates fall in the same tax year. So we have to consider the both profit of a period ended 31st March 22 and the 30th April 21, both will be considered, and this will be total 80,000. Then we have to less the overlap profit, that the benefit we are receiving from overlap profit in the closing year, and it would reduce the final assessable amount to 53,000. So this is the comprehensive test your understanding where the business had been started and also ceased, and you have to consider you have to find out the Avala profit in the first 2 tax years, and then you have to consider the final assessment amount.